Hello friends, we'll be discussing another illustration which is related to calls in advance and calls in arrears together in this illustration. Now when we speak about calls in arrears and calls in advance, yes, there can be a scenario where you might face both these situations in one illustration itself. So we have this specific illustration for you where we have certain parts of calls in advance, certain parts of calls in arrears as well in this part, or rather as a part of this specific illustration. So let's jot down the illustration first and figure out what exactly do we have to study in this one. Now the illustration has been mentioned to you for your reference. This specific illustration as discussed has calls in arrears as well as calls in advance. So let's read out the illustration which has been jotted down and then figure out what exactly do we have to do. This refers to Rashmi Limited, who issued 1 lakh shares at par, that means at a value of rupees 10. This value of rupees 10 was then further divided into 4 categories: application amount, allotment amount, first call and final call. Application amount was 2.50, allotment was 3 rupees, first call was 2 rupees, and final call was 2.5 rupees. All the shares were fully subscribed. That means there is no case of undersubscription, no case of oversubscription here. All the cases, or rather all the shares were fully subscribed here. Mr. N, who had 10,000 shares, who paid the total amount of final call as well in the first call itself. That means whenever the first call was due, he paid the first call. Who had 10,000 shares in his name, he paid the first call for those 10,000 shares as well as the final call for those 10,000 shares. Now, there has been an information that is provided to you. Final call was made 3 months after the first call was made. That means if the first call has been made in April, for example, then the final call was made 3 months after April. That means May, June, July. In July, that specific call was made. So if the interest is supposed to be provided, that means this interest will be provided for 3 months here. Again, there was another shareholder who had 1,000 shares on his name, who paid his first call due after 2 months. That means there is a gap between first call and the final call. The gap is for 3 months. So this shareholder paid his first call dues 2 months after the first call was made. So if the first call was made in April, he paid that much of amount at the month end of May, or rather in the month of June, because April gone, May gone. Then after May, he went ahead and paid up the amount. So he's entitled to pay an interest to the company, which is known as calls in arrears interest. And the company is supposed to pay an interest to Mr. N, who did pay an amount of the final call 3 months in advance. So 3 months interest is supposed to be provided by the company to the shareholder, Mr. N. And the company is also entitled to receive an interest of X percentage from a shareholder, not Mr. N, a shareholder who has 1,000 shares on his name, for delaying the payment by 2 months. So you have to go ahead and journalize the entry now. So let's prepare the journal format first. So the first entry will refer to the application receipt. That means receipt of application money. So the receipt of application money will be 1 lakh shares multiplied by 2.5, because that is the application money amount. So 1 lakh multiplied by 2.5 will give you an amount of somewhere around 2,50,000. Now, as there is no refund here, this whole amount can be transferred to equity share capital. So let's move it. So we have moved the application money to the share capital account. Now it's time to make the entry for due of allotment amount. So ideally, when we are talking about allotment, we are basically supposed to receive around 1 lakh multiplied by 3, that is allotment money. 3 lakh rupees is ideally we're supposed to receive. Let's figure out whether we receive the whole amount or whether we receive less amount than that. Now, when it comes to allotment, there was no calls in arrears, there was no calls in advance because allotment money was completely paid. So we assume that everything has been received here. So the entry here will be when the receipt of allotment entry, or rather the receipt of allotment amount, has to be journalized bank account debit to share allotment account. Now the next entry will refer to the first call amount being due. That means the first call, yes, the first call amount that was supposed to be due here will make that entry now. So the first call amount is also mentioned, that is 2 rupees per share. 1 lakh is the number of shares that we have. So 1 lakh multiplied by 2 gives you 2 lakh. 2 lakh is ideally what we're supposed to receive. Let's figure out whether we have received more than that or less than that, or equivalent to something like 2 lakh. Now in the question it was mentioned that one of the shareholder has paid the final call amount as well. So let's figure out how much is the final call amount that he has paid in addition. The final call amount refers to 2.50. 10,000 shareholder will divide the page into two sections again now. And shareholder 1 is the person who has only 1,000 equity shares. So that person hasn't paid the complete amount yet. That means that person has made, or rather when this entry was supposed to be passed, that time he didn't pay the amount, he didn't mention the amount at all. So now Mr. N has paid the first call amount as well, plus the amount related to final call, that is 2.5. So he has paid around 4.5 rupees per share. So if you see that final call amount that he has paid, that is 2.5 rupees per share on 10,000 shares, that means 25,000 he has paid in advance. Now the same thing when we talk about the shareholder number 1, he hasn't paid that much of amount related to the first call, that is 1,000 multiplied by 2, that is 2,000 rupees, he hasn't paid it yet. So basically when we are talking about calls in arrears, we have calls in arrears of 2000, and then later on we have certain amount, or rather in this mention, or rather in this entry itself, we have calls in advance as well. So let's pass the entry accordingly. So the entry that will pass right now related to this specific entry will be one expense that we have or a loss that we have, that means calls in arrears, and one income, additional income, prepaid income that we have, or other pre-received income that we have is calls in advance. Now in terms of calls in advance and in terms of calls in arrears, we know the amount. Let's post that amount there. So the share first call value we know, that is 2 lakh rupees. Calls in advance we know 25,000. Calls in arrears we know 2,000. So the balancing figure will be the bank amount, or rather the amount that we have already received. So basically we have received 2,23,000 here. Now the next entry that will pass is the amount that we have received right now, because after 2 months he still paid the first call amount. So we'll receive, or rather we'll mention that amount, or rather that entry first. So the entry that we have passed here is bank account debit to share first call related to that specific calls in arrears, which amounted to 2,000 rupees. Rather this amount wasn't paid in the first instance, it has been paid after 2 months. So on this specific amount, we have to charge an interest of 5%. We'll assume that it is an interest of 5% that is charged, because as per the technical terms, we take it as 5% on calls in arrears, and calls in advance, we take it as 6%. So on that 2,000, 5% refers to 100 rupees per annum. That means 100 rupees for 12 months. For 1 month, we have to calculate that. So for 1 month, it is 8.33. So rounding it off to 8 rupees for 1 month. It has been delayed by 2 months. Hence, 2 months interest will be 8 multiplied by 2. That gives you 16 rupees. So that is an interest that we are receiving it. So the entry will be, as interest is an income for us, hence it will be credited and it is given to us by the shareholder. Hence shareholder's account will be debited here. So that has been done now. The next part will be the amount, or rather the final call amount being due. So again here, when the amount is due, we are supposed to receive 2,50,000 amount, but we won't be receiving 2,50,000 because we have already received 25,000 in advance for one specific shareholder who had 10,000 shares. So that will be subtracted and whatever balance is left will be transferred to the bank account. So for share final call, we have a credit of 2,50,000 that was supposed to be expected. Out of that, we have already received 25,000 as a credit here as a part of calls in advance. So the balance is 2,25,000, which will be ideally 2,50,000 minus 25,000, which gives you a balance of 2,20,000 will be moved to bank account. And the last entry that will be passing here is the specific amount of calls, or rather interest on calls in advance, as this is an expense for us, or rather this is a loss for us, hence it will be debited and the shareholders account will be credited here. Now the interest calculation is very simple. You have to give 6% interest on the amount due, that is 25,000 multiplied by 6% multiplied by 3 divided by 12. 3, the reason being it was due after 3 months but he has paid it before 3 months. So that comes to a total of 375 rupees. So this marks the closure of this specific illustration where we have given the details about calls in advance as well, calls in arrears as well. Rather, the interest on calculation of such calls in advance and calls in arrears has also been taken into consideration. So this is how the example related to calls in arrears and calls in advance, basically the interest calculation, the tenure, month, days calculation has to be taken into consideration. As in this question, there was no percentage mentioned, hence we have assumed that on calls of advance or other calls in advance, you have to give 6%, calls in arrears, you have to charge 5% interest on that. So that's it for this video. Thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.